So to start with, instead of getting the normal catering of the Costco sandwiches, we decided to do catering from Vue de Monde today. And so hopefully that'll encourage you to come along next month. That was sense of humor. The market, of course, is up 11.5%, while earnings estimates were cut 9.4% for the year ending December 2021. That's pushing the price-earnings ratio for 2021 up 23% to 17.3. So we're trading at a much higher multiple than ever before. Since 2000 in 2000 when we had the dot-com bubble. Earnings estimates are just starting to be cut, and the 100 companies have pulled guidance or dividends so far. So we're getting earnings estimates which have a very wide range in expectations because there's very little guidance and there's so much uncertainty. Now, is that a question, Kelly? Okay. So we're figuring out how to answer questions here, so we hope you keep putting them through if we're missing them. In February, we said that 5 companies were making up 18% of the S&P 500. There's been a continued consolidation of the leadership in the market as people are snacking and clicking. And so Apple, Microsoft, Alphabet, Amazon, and Facebook were 18% of the S&P 500 and now represent 20.5% with further consolidation in that leadership. Clicks and snacks are companies like Mondelez, where people are staying home and eating crackers and cheese, and they are clicking on their computers, which is benefiting those companies that allow for virtualization, whereas other industries are collapsing, such as oil, auto, transportation, real estate, and retail. We're going to see a number of bankruptcies of retailers to follow on from J.Crew. We could have a bankruptcy from Macy's and many other companies as people use Amazon to buy things. Auto, of course, people aren't driving. Airlines, people aren't flying. And in real estate, we'll see later that people in office space in New York City are not paying rent. I think they collected about 75% of rents in April, but the retailers have only collected about 50%. So we expect to see a lot of bankruptcies in real estate as well. What's going on in the market is what I call a head fake right now. So with quantitative easing, the Federal Reserve Bank is buying bonds from banks, and they're pushing down into the risk curve by buying bonds issued at just above the junk rating, which means that the Federal Reserve has substantially changed their policy in the market of avoiding risk to actually taking on risk. And as they buy bonds in the market, we're seeing a lot of improvement in the trading desks of Goldman Sachs and Morgan Stanley, Bank of America, et cetera. So we're seeing some very strong liquidity being driven into Wall Street, but that is not really helping Main Street. It's the fiscal policy from the Treasury, where the Treasury, of course, will tax and spend money and has substantial debt already, where they will need to get money into the hands of consumers quickly so that consumers will not go bankrupt. For example, the U.S. GDP is around 20 trillion. The U.S. Treasury debt is about 22. And perversely now, the Federal Reserve is actually at the point where they're almost paying the federal government to borrow money, which is not somewhere that we want to have for very long. Because if the federal government is encouraged to borrow money, it could encourage them to get further into debt. So it's not helping Main Street. So there's some concerns there. Kelly, I can't see the last point there. So what we're seeing is a destruction of capital base, particularly in the middle class. So if we have 30 million people now unemployed out of a workforce of about 165 million, that's about 18% of the workforce is suddenly unemployed, and they will get some benefits from the Treasury, but they are seeing massive destruction capital, particularly in that middle class, young families, for the sake of what we're recommending right now is preserve capital as we head into this, and we think the market's run up this week. This month was what we call a head fake. So if you don't know what a head fake is, if you're playing sports and you fake you're going this way, you're going that way. It's a